it is an asset that can be held in something as immaterial as a thought, which I find, from a theoretical point of view, I find absolutely fascinating.
72% of the population of the planet are under some sort of authoritarian regime. So it's a peer-to-peer cash, as we discussed, outside of governmental control. Bitcoin is designed to be attacked, and it's designed to be resilient against all of these external forces.
You can have all the Bitcoin in the world, and you still wouldn't be able to change the rules.
Will the demand continue? Yeah. Will people keep wanting Bitcoin? Hello and welcome to the Institute of Economic Affairs YouTube channel. My name is Jamie Legg and I'm the Digital Production Manager here at the IEA. Today we've got a special topic that we don't usually cover too much, Bitcoin, and we've got two special guests with us to discuss this. First, we've got Susie Ward, CEO and co-founder of Bitcoin Policy UK, and Freddie New, the Chief Policy Officer and co-founder, also at Bitcoin Policy UK. Before we get into the topic, consider subscribing to the IEA Substack channel, insider.iea.org.uk, where you can find all of the IEA's digital material and also articles and publications. So, back onto the topic. So, welcome, guys. Thanks for coming. So, to start with, did you want to each discuss, your backgrounds, how you got into working with Bitcoin, and how you started Bitcoin Policy UK?
Actually, Freddie reached out to me because I wrote an article about how Bitcoin could help save the environment. So there was a lot of buzz, so fear, uncertainty and doubt around Bitcoin, and a lot of misinformation about Bitcoin and its energy consumption and how harmful it was to the planet. So I wrote a piece that was one of the first that made it into the mainstream media. Freddie read it, reached out to me and asked if I'd be the head of mining for the group, which is how I started at Bitcoin Policy UK.
Head of mining, so you focus on the mining side of things. Do you want to quickly just explain very, very short, what is Bitcoin mining to those that are unaware of it?
Bitcoin mining is a way of generating new Bitcoin. So at the moment, the issuance is 450 a day, and every 10 minutes, a new block is mined, and each block will bring 3.125 Bitcoin into the system. So Bitcoin mining is a way of solving puzzles which help the miners solve the block, which then gives them the Bitcoin. It's a way of securing the system.
Yeah, and it's a way of, the monetary supply of the amount of Bitcoin that's created. Yep.
Just to make sure that the issuance is set in stone, can't be changed, and everybody knows exactly what it is, unlike our current monetary policy.
But how about yourself? How did you get into Bitcoin, and how did you start at Bitcoin Policy UK?
Cool. So I'm a lawyer by training. I spent many years in M&A in the city, and both in private equity and special situations. So I first became interested in Bitcoin actually during the 2013 Cypriot banking crisis and the bail-in that took place there, which some of your listeners and watchers may remember. I was writing a piece for our clients at the law firm I was at the time, came across Bitcoin, thought it sounded fascinating, read a lot about it. Because I'm an idiot, I didn't buy any at the time. Otherwise, I'd be on an island rather than in your nice podcast studio. But anyway, we live and learn. And after a long time in M&A, I was very keen to go and work more in the sort of venture capital fintech world. Mm-hmm. And I transitioned into working in fintech startups. And one of the fintech startups I worked at, I helped to launch the Bitcoin/cryptocurrency product. And as part of that, began to contribute to a lot more consultations with the FCA, Treasury, Bank of England, and so on, around the nature of Bitcoin and what it was. And it became quite clear that not many people were focusing solely on Bitcoin as a pure monetary asset. There's a lot of hot air in the system and in the space around other cryptocurrencies. And a group of like-minded individuals with relevant experience. So Susie with financial and journalism experience, myself on the legal side, and a few others came together and thought there was room in the space for a Bitcoin-focused advocacy group, and that's what we now do.
Okay, so with the Bitcoin advocacy that you do at Bitcoin Policy UK, what are the main areas of focus that you do? Is it create just educational content, or is it partly speaking to government, or
trying to educate? Yeah, absolutely. So we want to advocate for good policies in the UK for everybody that hold and use and mine Bitcoin, to make sure that there is actually good legislation that can't. For example, I'm thinking of the FCA, and the same week that.
And so, just to explain, the FCA for our audience,
Financial Conduct Authority.
Sure.
So, for example, the beginning of 2024, just as an example of how far behind the UK are in terms of their policies, which is why the work that Freddie does is so incredible, and that there's nobody else doing it as well, which makes it even more special. But the same week that the US approved a Bitcoin spot ETF, so people in the US were able to now buy it in their pensions and in ISA or their equivalent over in the US. We made it harder for people to buy Bitcoin in the UK, so that we had to fill out all these crazy questionnaires. It wasn't allowed to be more than 10% of your net wealth unless you were willing to lie on the form. And they made the on-off ramps a lot harder. So that was just at a time before it went on 100% increase over the whole of 2024 and on a bull run. So what the FCA are doing essentially is implementing things that make it difficult for people to operate or companies to operate in the UK, stopping people from retail investors from investing in the best performing assets of a decade at the same time that the rest of the world are embracing it. And we need to make sure that changes, because the UK is being left behind. So our current government at the moment, talks relentlessly about growth, but we haven't seen any evidence of how that's going to look. And so therefore we have to educate and advocate for good policies so we don't get left behind.
Yeah, no, I agree. I mean, many people here at the IEA and our general mission is to advocate for, free markets and whatnot. And we do see that the UK is falling behind, especially when it comes to regulations in the financial sector. So many people will be asking why Bitcoin in particular. Many of our audience and libertarian leaning people will be like, "Oh, this is let the market decide." Why are you choosing Bitcoin in particular? Is there not a flurry of innovation and stuff with all other different cryptocurrencies and use cases?
I'd probably address that in two areas, and the first is really market driven. It's important to note, I think, that Bitcoin, if you're looking at it from a pure market perspective, Bitcoin alone represents 60% of the value of the entire cryptocurrency market. And just to put that in context, the other 40% comprises thousands and thousands and thousands of other coins. So if you're looking at it from a market-driven perspective, the market's effectively already decided. The closest competitor to Bitcoin is, I think, I'm going to get the figures wrong here, not even a fifth of the size in terms of market capitalization, and is declining day on day in its value as opposed to Bitcoin. So if we're looking for a pure market-driven solution and you're looking for a winning horse, Bitcoin is it. The answer to why it is slightly more complex. One issue Susie's already touched on is mining. Mining is what makes Bitcoin so incredibly difficult to attack. The transaction ledger that I mentioned earlier, in order to add new entries to that ledger, requires an enormous cost, both in electricity and in terms of computer hardware. And it's currently functionally impossible for any other cryptocurrency to achieve the same level of security, of power, of energy back in the system as Bitcoin. So as a pure market-driven play, if you were looking at it with a hard market hat on, it's very difficult to see any other cryptocurrency ever catching up to Bitcoin in terms of those monetary security aspects of its technology. The technology one's interesting, and I think Susie gave a great summary there, I think, of some things the FCA have misunderstood. So what she described there was the precise definition that the FCA have put on Bitcoin and all other cryptos, which is that of a restricted mass market investment. And that means roughly that these can only be offered to the public under a very restricted set of circumstances. Now, the cryptocurrency market, and what we're trying to explain to the FCA through our work, is that it's really extraordinarily broad. And at the moment, the FCA treats Bitcoin with a 1.5 trillion market cap, comparable in size to Meta, formerly Facebook, exactly the same as a coin that you might spin up in your bedroom and then offer to the public with the majority of the supply still held by yourself. So the FCA at the moment groups those two different computer technologies in the same bucket, and our argument to them is, look, let's use a company analogy. So trying to pretend that Meta with a 1.5 trillion market capitalization is the same as a company that I newly incorporated in my bedroom and then offer to the public is category confusion. And again, picking up on two of your points, Susie, two of the FCA's mandates are a consumer protection mandate and a growth mandate. And, in principle, we strongly support protecting consumers and growing the economy. At the moment, the consumers are inadequately protected because they're being told that my company that I create in my bedroom and Meta pose the same level of risk. So if you approve of the idea of the regulatory principle, same risk, same regulation, that's gone out the window. And then secondly, by really strangling the growth of this industry in this country, we're seeing opportunities move back to the US, go into MENA, go off into Hong Kong. At the moment, our domestic financial services companies can't even offer comparable ETFs to the United States. And, London's been suffering as a location for listing for quite a long time. And I was at the sharp end of this for a long time. It's no longer an attractive place for companies to list. And I think that's a shame and should change.
And they're leaving as well.
Oh, yeah.
So there are examples of companies, because I've been reaching out to them, trying to find out what the barriers are that they have in the UK to find out why they're not operating here. And it does come down to regulation and the expense that is put on them. And so therefore it's just much easier for them to leave. And we're seeing it happen a lot. Yeah,
so a lot of your mission is actually just about keeping us competitive as a country.
Absolutely.
But using it, Bitcoin as this kind of vehicle and this new technology as your main point of focus. Just so our kind of listeners are more liberal or libertarian in thought, as we spoke about before this interview, and some of the listeners will know, Hayek from our parish and that influenced us to create the Institute of Economic Affairs. We released a publication back in the 70s of denationalization of money, which, as it says on the cover, proposing the idea of private money and there being competition in money instead of it being a kind of run by fiat. And that, do you think that Bitcoin and other cryptocurrencies are what Hayek might have imagined, even though he didn't live to see the internet? And what do you think his thought would be on Bitcoin and potentially other cryptocurrencies?
Well, I always tend to describe Bitcoin as a non-state issued digital currency or non-state issued digital money. And Susie, I think your definition is broadly similar when we've spoken about that before.
Yeah.
And you mentioned, Susie, the famous clip of Hayek talking about taking the control of money out of the hands of the government.
I've even written it down because it's brilliant. He said, "I don't believe we shall ever have a good money again before we take the thing out of the hands of governments. That is, we can't take it violently out of the hands of government. All we can do is by some slight roundabout way introduce something that can't be stopped."
Yeah.
It's perfect. He's talking about Bitcoin.
Yeah, I guess again through his whole approach of spontaneous order, it's something that he couldn't have imagined, but it's the only way that he could have seen there being any alternative to, I guess, fiat currency.
Because it is a peer-to-peer cash outside of governmental control.
Yep.
Yes, and I mean, one of the buzzwords you hear about Bitcoin is that it's decentralized, but I always think it's fun and interesting to delve into what exactly do we mean by decentralized. And to my mind, that really covers sort of two broad areas. Firstly, who has the capability of updating the ledger of transactions, which we've already mentioned. And it's extraordinarily difficult for a government to take control of that because the miners who do that are geographically distributed across the world in every jurisdiction. And then the miners are not the only part of the network that are important. The nodes are also important. So The nodes are small computers, each of which have a full copy of the transaction ledger. And whenever new transactions are broadcast to the network, each of the nodes check and see if those transactions are valid. And if they are, they're then submitted into what we call the mempool, which is pending transactions. And then those are swept up by the miners. They are run through an algorithm, which is called hashing. And then the miners compete in the mining process that Susie described earlier. And then the second thing to consider is who can control the money or its monetary policy. And it's perhaps useful here to consider the difference between Bitcoin and other cryptocurrencies here in a pure monetary sense. Only the entire network can control the monetary policy and the supply of money in Bitcoin. It's extraordinarily difficult to change the rules of the protocol. And looking at it with an investor's hat on, that makes it a much more investable asset than a protocol which maybe is controlled 20% by a VC fund like A16Z. or 25% by the co-founders, or 80% by the issuers, as Ripple originally was. So if you're looking at these things with a monetary policy hat on, you instantaneously go look at Bitcoin and say, well, the monetary policy is set in stone. We know what the emission schedule is. We know how many Bitcoin there are going to be. And no one is able to change that, which to my mind makes it, even though it's digital, makes it extraordinarily robust. And one of the hard things for us to get our heads around is that we've grown up in a world of digital abundance, whereas Bitcoin is really digital scarcity. And the way that's achieved is through those two things. Hard to add new transactions to the ledger, hard to change the rules.
Yeah, it's funny you asked that because I was just going to come on to this, even though we'll do the quick fire questions that many people will be asking, is many people say, well, what if a government, buys up 50% of all the Bitcoin in the market?
That would be very difficult to do.
It'd be very difficult. Well, yeah, I guess, yeah.
Huge waste
people
of funds, man.
Exactly. Which we could probably talk about, Trump in a moment. But
I think he wants all the Bitcoins to be mined in the US.
Yeah, that's his, he wants everything ever made, I think, ever just made in the US. But people often say, what if there's one company that mines 68% of all the Bitcoin currently? Because I remember people were always saying China. It was all in China and it's all the GPUs.
There are centralization issues.
Yeah, but I guess what's the balance between that? Because I know that the answer is generally you've got the separation of mining interest, but then the node interest. Do you want to quickly just briefly say?
I'd use this company analogy. I'll be as quick as I can. Susie's got some strong opinions here.
Right.
Contrast it with the way the company voting works. So if you draw an analogy between a Bitcoin and a company share, typically a share gives you voting power in the company. That's not the case in the Bitcoin system. So you can have all the Bitcoin in the world and you still wouldn't be able to change the rules or change the emissions policy because the Bitcoin doesn't give you a vote. So
I can't remember what I was going to say, but that's exactly it.
That's fine. Don't worry. Well, moving on as I hinted.
There is one thing that I would like to say, following on from Freddie's point, is it's also one of the only systems that has never been hacked.
Yes, yeah, it's there's many different ones that have been hacked. Famously, what was it? Ethereum, not necessarily hacked, but they backtracked a lot of the transactions. The DAO, that's it. But yeah, its uptime has been 100%.
Near perfect.
99.98. I'd love it to be 100, but there were two short periods. The most recent of which was in 2013, from memory.
Okay.
So it's had pretty good, decent uptime. Better than banks, which are going down on every payday, right? But,
yeah. Moving on, as we just hinted, with governments owning it and whatnot, and just so that we're kind of current, Trump has recently announced a strategic Bitcoin reserve or strategic crypto reserve, whichever you're looking at, because it's going to include multiple different coins and whatnot. What's your thoughts on this? Is this good, or does it go against the kind of mission of Bitcoin, of it being decentralized, not by fiat? What's the? I guess there's the philosophical argument for it, but then also the financial argument.
I'm not a fan of the institutionalization of it, although I do understand that it has to happen. Bitcoin is anti-fragile and everyone has to be able to be a part of the network. So I can't say that I don't want institutions to get on board. I just would prefer it if it remained as a peer-to-peer cash and acted as a freedom money, which is what essentially it was designed for, to be outside of that control. But it was always inevitable, just like Bitcoin's inevitable, that it's going to get taken over by institutions and probably get taken over to a large part by governments as well. And it's just part of the process.
Okay, and you mentioned a couple of words there. Anti-fragile, very briefly. What do you mean by anti-fragile? It's used a lot to describe Bitcoin. But
the anti-fragile aspect of Bitcoin is what I think makes it most genius is, for example, you will have an antivirus on your computer, and that will be to keep the viruses out. Bitcoin is designed to be attacked, and it's designed to be resilient against all of these external forces. So Bitcoin doesn't survive institutions, then it doesn't deserve to exist. And that's the way that I look at it in terms of pretty much anything that does get thrown at Bitcoin, which may be seen as a threat. If Bitcoin can't survive it and its anti-fragility is not strong enough, then it doesn't deserve to survive.
And when you say survive, you're meaning if a massive state actor tried to do a 51% attack, which is when you tried miners and nodes come together and they try to change the protocol.
Right.
Yeah.
So that's one Yeah, go on.
It's interesting you raise that, because even in the instance of a 51% attack, that would likely not be successful for longer than 10 minutes, because the remainder of the network would then fork off and leave that state actor on its own. Exactly. It'd be incredibly expensive.
Yeah.
It would... And fork off, you just mean in break times. Obviously, there's all these details. Let's get into the details, but fork off, just for the audience, is people will come to an agreement where they separate and there'll be two networks and the original will carry it.
Just sounded a little bit rude, though, didn't it?
Sorry. Yes, not the obscene alternative. A fork is a protocol change that's effectively renders two new chains that are incompatible with each other. They follow different rules from that point. I think I make 3 points in relation to state adoption. Firstly, a number of nation states already hold Bitcoin. So there's an important policy question for them as to what are we going to do with it. The United Kingdom, for example, holds a very large chunk, with a third largest nation state holder, which is one of the reasons that we're so keen for the UK to take it seriously. We hold about $5.5 billion worth of Bitcoin right now, which, if you're interested in the winter fuel allowance, is about 2.5 years worth of winter fuel allowances. And so, if you wanted to set it to pay for winter fuel, be my guest. Secondly, I think, as Susie rightly said, if Bitcoin is successful, it will also inevitably be adopted by governments as a neutral global means of transferring value, which cannot be interfered with by other state actors, hostile or otherwise. And thirdly, there's an interesting nuance in terms of Bitcoin as a settlement layer, for example, similar to the way that central banks currently settle between themselves, and other protocols or by payment rules that may be layered on top of it, in much the same way as our SWIFT system today is layered upon the interbank settlements, or we use Visa and MasterCard, which are payment systems that sit on top of our underlying monetary system. One of the early pioneers of Bitcoin, a man called Hal Finney, who was an early cryptographer, he postulated a long time ago that at one point in the future, we might be likely to see Bitcoin banks, effectively, tracking back to Hayek, holding stocks of Bitcoin and then issuing their own, effectively, Bitcoin-backed notes that they could then trade between themselves at a much higher velocity than our 10-minute block time, represented by the base settlement layer that they use. So actually, that's an interesting nuance I hadn't thought of.
Yeah, that's a really interesting take. I haven't heard that either. Just to quickly ask, actually, because you're explaining the technology of it. It's incorruptible, anti-fragile. But I guess the main thing, and we've been talking about supply, main thing is, will the demand continue? Yeah. Will people keep wanting Bitcoin? Why would people keep wanting Bitcoin?
We are supply crunch is probably one of my favorite subjects, actually, I think. So because the issuance is only 450, because a day Bitcoin that comes into the system, halving every 4 years. And because now game theory is playing out globally. So I think that a lot of countries are stacking and a lot of institutions are stacking, but they're keeping it quiet because we only got 450 coming into the system. And I think on average, BlackRock, since the ETF came out, have been buying up about 2,000 a day. It's only maths. It's heading in one direction and it's going to go up. I mean, we had a God candle a few days ago. That's £10,000 in $10,000 in one day. We're going to see a lot of those in the future. And I think that as the supply gets squeezed and more people come on, it's inevitable that it's just going to become one of the most sought after assets on the planet.
So you're saying there's a strong just incentive for individuals to... I guess this comes to the main issue of when people say invest in Bitcoin. For something to be medium of exchange in a currency, you don't invest in dollars and whatnot. I guess that's where many people would have a disagreement, maybe.
Yeah, I think it's interesting to consider, maybe just riffing on one point that Susie made there, what's the total addressable market of Bitcoin? And that's tightly associated with what kind of thing you think it is. So what's your TAM for a store of value? That's potentially everyone who has some savings in the world they might want to protect from inflation. And then if you map that against the current adoption rate, so we think in the UK, for example, about 5 million people are thought to hold Bitcoin, and that's against an adult population of, I think, about 35 to 40 million. So there's a reasonable room for growth there in terms of price appreciation. And then in monetary terms, at the moment, my personal view is that we're still witnessing the monetization of Bitcoin as an asset. Your listeners are probably familiar with the idea of monetization in 3 stages: store of value, medium of exchange, unit of account. At the moment, I think we're straddling store of value and medium of exchange. It's still more and more places are emerging where you can easily pay with Bitcoin, sometimes using one of the second layer protocols that I've talked about before. Much like Visa and MasterCard, these make instantaneous transactions possible, even though final settlement takes place later. And that's not dissimilar conceptually to the way in which we currently pay for things at a point of sale. Then again, if you are looking to unit of account, which is, in brief, the way that assets and services and goods are priced in a money that has been through the two previous stages, I think we're still quite a long way away from that in Bitcoin terms.
Okay. It is only a 16-year-old asset, though. When you think about its growth and where it's come from and where we are today, the fact that we have the United States of America talking about putting it into having it as a reserve asset, that's huge growth.
Yeah, it's interesting you say that. But if I put my economics nerdy hat on, Ludwig von Mises always laid out the fact that for a currency to be, I guess, spontaneously grow, it initially usually has to be a medium of exchange. Now, that's not necessarily the case for Bitcoin so far. Am I correct in saying, majority of it isn't necessarily used for day-to-day medium of exchange?
No, I'd agree.
Yep.
Yeah, and I think what we're actually witnessing is something that happened before recorded history in the example of gold. So gold, for a very long time, it's thought was hoarded simply for certain of its properties. It was shiny, it looked good, it was heavy, you might like to play with it.
Right.
The emergence of gold as a money happened much later than the fact that it was hoarded. So if you think about it in those kind of terms, we're witnessing something relatively exciting that's happened relatively rarely in human history. And in my understanding of Mises' theories there, what happened with gold happened so far in our history that obviously it's before the invention of writing. So there's actually no physical record of it. The evidence being the physical remains of the gold, which subsequently became used as a medium of exchange and widely accepted as such.
Okay. No, that's a really interesting take. And that's older than gold. Yeah. Use of gold is older than the hills.
Yeah. It's also, even though it's not predominantly being used as a medium of exchange, it is being used by a lot of people as a lifeline. So, for example, in the Global South, they use it, or even I think a statistic that we heard at the Human Rights Foundation was 72% of the population of the planet are under some sort of authoritarian regime. So it's a peer-to-peer cash, as we discussed, outside of governmental control. And if your money is being debased or it's difficult to gain access or debanking is occurring, then it is a genuine lifeline for people that don't have access to those services. So that may not be the majority of its usage in terms of the institutional adoption and what we're seeing there, but there's still a lot of people that are using it.
We can give some concrete examples of that. Alexei Navalny's anti-corruption foundation, for example, they had their bank accounts completely frozen in Russia, and we've worked with some of his team over the past year or so. Bitcoin was a lifeline for them. They were able to continue their work solely through their use of Bitcoin. Navalny's funeral was paid for using Bitcoin.
Right.
And Bitcoin is used, as Susie says, throughout the Global South in countries where their currencies are collapsing as a payment system using the Lightning network, one of the second layer protocols. One thing I often say is that if we need to explain Bitcoin to you, then you probably don't need it yet.
Yeah.
It's money in extremis, but it's important, as Susie rightly says, to remember that it's money that dictators can't stop.
Yeah, brilliant. That's really interesting. We're going to move over to quick-fire questions, even though some of these are going to be difficult quick-fire. When I say quick-fire, maybe 30 seconds, a minute. Because, as we've probably already proven.
I'll the intrinsic value one. I'll go on, and I won't even be able to answer it.
As the questions of we've already asked, it's not necessarily a one-word answer for most of Bitcoin.
No, exactly.
Cool. So first is, it's really volatile. It's super volatile. Peaks, troughs, everybody says it's a Ponzi scheme, it's, tulips. What do you say to this volatility issue?
It's the price you pay for being early.
Price you pay for being early?
Yeah.
Okay. What if you buy at the peak of 2017 and then...
If you hold for a 4-year period, no one has done that, has lost money.
Yeah.
The volatility has been smoothing out over time, and it's now comparable to most mega cap tech stocks.
Okay.
In fact, it chopped sideways for a long time and got quite boring. And I think people missed it.
Missed it, yeah. Okay. One that I think is one of my biggest kind of concerns with it is people say that it's great because it's got 21 million set supply. It is deflationary. But if we're going to go down, like Chicago school kind of economics, you need expansionary money to kind of lubricate.
Do you?
Well, this is the thing I'm asking is generally they say you want about a 2% inflation rate.
That's what you're taught at economic school, isn't it?
This is many people I respect here at the IEA, say that it is actually a good thing. Even with gold, you have a growth in inflation, slight inflation in its supply. By having that and having that kind of debt-based system, it allows people to, and it allows for economic expansion. It allows for people to start businesses and take debt. And how do you feel about the fact that it's potentially a money or a digital asset that's got got a set supply and it can't go above 21 million. The price in electrics and TVs goes down, yet we still buy more of it. But if you have that on a global scale and on a whole monetary system, is that not a good thing?
It's very hard to do this in a quick fire.
I was about to say this is a ridiculous quick fire.
Okay, I'll be as quick as I can.
When you say quick fire, these are just quick questions, long answers.
I'll be.
Yeah.
Okay, I'll go as fast as I can.
It doesn't have to be fast. Don't worry. It's you can.
I think the first point I made is that for a very long period of time, most global currencies were pegged to gold, and gold, although it has a very slow rate of inflation commensurate with the speed at which it's mined, is broadly much more deflationary than modern monies, which can be created at whim. And I point to the evidence we have of stable economies and, in fact, growing economies, perhaps citing the example of the United States in the century before the First World War. Fantastic period of economic expansion on a gold standard, arguably deflationary monetary system. Second point is, even if your money is deflationary, that doesn't necessarily mean that you're not going to spend money on goods and services which you want or need. So economies still can function. Japan, for example, is a good example of a pretty strange outlier economy, which has arguably been going through, and we'll be studying Japan for a long time to come, trying to understand exactly how it has functioned in the way that it has. So
it's one of the 4 types of economies, isn't it? Was it like developed, developing, Argentina, and Japan?
Yes, exactly. And then thirdly, I suppose I'm not as much of a Bitcoin maximalist to believe that the entire global economy will run from Bitcoin. I see there's scope for credit. Obviously I worked in the city for a long time. I did a lot of LBOs, and I think the idea that you pulling profits from the future into the present via a sensible use of credit is not necessarily a bad thing to do, and that does enable the expansion of businesses. And there's nothing intrinsically wrong, I feel, with having a hard capped, more store of value type asset, which can also be used as a money, and using your debt or your credit based system in order to start businesses or to grow the economy in the present.
Right.
And the differentiation there is that the value of the store of value will be that there will be a delta there rather than in the supply of that money.
Brilliant. Yeah.
Because the current system at the moment incentivizes people to spend their money sooner rather than save it for the future. And so therefore we have this rampant consumer-based economy that requires people to just constantly spend. And that's environmentally very damaging. So our current system not only leads to inflation just through irresponsible debt creation, but it also leads to other consequences that we see. So we can't necessarily talk about net zero and saving the environment while we live under this monetary system. And like Freddie said, I don't think that it will just be Bitcoin, but I do think it will end up being the unofficial reserve currency of the world.
Okay. Thank you for those answers. And you kind of touched upon it, the 19th century gold standard, kind of pushing on to, well, under the gold standard, everything we'd like to think went, quite well. But then when you get to World War One, governments needed to borrow loads of money to fund the war. What if we get into a position like that where most people are on a Bitcoin standard, but then China launches a massive invasion? We've got to arm ourselves to the gills, and there's another war that we need to fund.
I don't think China would want to spend their Bitcoin on war.
Well, they'd spend their fiat, wouldn't they?
But this is the thing.
I think in that kind of situation, you'd need to fall back on realpolitik, which is, as we've seen before, countries have decoupled and from the gold standard and recoupled again, as we did ourselves. From memory, we decoupled in.
It went a bit badly though, didn't it?
Yes, it didn't go particularly well.
Yeah.
But the one thing that to learn from history is that we don't learn from history, and we love repeating the same mistakes. So if currencies were pegged to Bitcoin, my supposition is that there would be a depeg at some point, humans being humans.
Yeah.
But the interesting thing about Bitcoin, and something we haven't mentioned yet, is that it's entirely possible to self-custody it in a way that isn't possible with gold. You can hold Bitcoin in your head as long as you can memorize 12 words.
Yep.
And you can encode that in any number of different ways. Again, we don't have time to delve into that. This is something for another pod, but it is an asset that can be held in something as immaterial as a thought, which I find, from a theoretical point of view, I find absolutely fascinating.
Yeah, philosophically, that's quite powerful. Okay. It's a speculative kind of asset, and it has no intrinsic value. I guess you've kind of touched upon it a bit.
Do you want to do the intrinsic and I'll do the
Says doesn't want to do intrinsic.
Okay. I've got some sympathy with people saying it doesn't have intrinsic value. I don't think money has intrinsic value. Money is a technology that is used to transmit value from one person to another. I would tend to agree with people. My response is, why do you think it matters? Can you prove to me that money has intrinsic value? And if you can't, then you should probably stop making that point.
Very good. There you go. They have it.
And then speculation. I've got some sympathy with that. It's like I said before, volatility is the price you pay for being the first business of him.
In a marketplace, people speculate on everything.
But is it only speculation because you don't understand it?
Well, some of it will be, but some of it will be speculation because you think you have spotted something that other people haven't.
You have, if you've done the research and you've educated yourself properly and you know exactly what you're holding. That's why Bitcoins don't tend to sell their Bitcoin, because they understand it. It's not
what Michael Barry did in 08. He'd spotted an asymmetric bet in the mortgage market.
Okay. What about other kind of cryptocurrencies where they offer stable coins? If you're in a third world country, you need access to dollars. Right now, you don't really have stable coins on Bitcoin, but on Ethereum, you can get easy.
I think Tether's starting to put some stable coins on.
Yes, I wish they wouldn't.
Me too. Yeah, not in.
That'll be a whole separate day.
That would be a whole separate thing. Yes. Stable coins are also providing a lifeline for people. I understand that there's a need. I know why people would want to use them. But taking Tether, for example, the way that it's backed is by 85% US debt. So what happens is the US export their inflation. It affects other countries. They then have to run to stable coins. Those stable coins then go back to support the US. And it's quite an awful vicious circle.
Okay. All right. Thank you. Next one.
I was just
sorry, I'm trying to keep quick questions, but yeah.
But they're such deep questions.
Yeah, I know, but I just know that these are always the big questions that people have when they're kind of exposed to Bitcoin. And then final kind of one is just generally the wealth concentration. People say that, it's actually Bitcoin's freedom, money, this and that, but is it not actually that the top 1% own a massive, massive amount, far more than, say, the wealth distribution of the UK and the US? Is that an issue?
It's less of an issue now than it was previously. And with every distribution peak, it's possible to... One of the nice things about Bitcoin is it's completely transparent. So you can see exactly how long a Bitcoin has been held or controlled by a particular address and when it's moved to and also where it's moved. And if you study the chain, it's possible to see the gradual distribution. Coins held for a particular length of time are gradually sold off into the market. And it's actually, in retrospect, a relatively good way of telling when a peak in price is going to come, because older, holders, for example, those who mined in the early days, will tend to sell off, and that may precipitate a sudden drop in the price at some point. Hard, obviously, to distinguish correlation from causation at that point. But yes, so I think it's important to acknowledge that in the early days there was heavy concentration in a small number of hands, but the distribution has been continuing for 15 years now, and it shows no sign of stopping. Having said that, there still are whales who do believe strongly in the proposition and will acquire more. But at the same time, the value the delta in the value has been such that if they want to sell off some Bitcoin and buy a house, and fair play to them.
For any of the audience that are listening, when you say whales, people like Michael Saylor, who is accumulating more, definitely not selling any Bitcoin.
No.
But, brilliant, thank you. So the next one I was going to kind of touch upon is something that you want to expand on, is how Bitcoin currently is portrayed in the mainstream media. How you say it's kind of negative, and how you want to kind of change that opinion from the media. How are you going about that, and what's your kind of analysis on the kind of current?
Well, I'm glad you used the word analysis, because analysis has been done on this, and there's an amazing website that I try and mention at every opportunity called Bitcoin Perception. And what they've done is analysed the media coverage across the major news outlets, so the Telegraph, the Daily Mail, the BBC, and decided, put them into categories of neutral, positive and negative. And so just taking the BBC, well, most of them actually are largely negative, with a very, very small amount of positive and a little slither of balanced or neutral. The thing is we've discussed all the amazing things here that Bitcoin can do. And if you're only writing negative, poorly researched articles, that's what's going to stick in people's minds. That's where they're going to for their news. So I spent a lot of time researching and writing about Bitcoin. I wrote for City AM, and now I write for Forbes. And so a large part of what I do is to try and unwind that damage by the mainstream media. In fact, there was an article about a year ago that every Bitcoin transaction every Bitcoin payment uses a swimming pool's worth of water. I use the term payment and transaction interchangeably. It changed the outcome by 1,000-fold, and everything in that article was provably wrong. The source was by a Dutch central banker that had been discredited in 2018, and it shouldn't have been written. And I tried to get it retracted, and I tried for over a year, proving that everything that they'd written at the time that they were writing it was factually incorrect. I just thought I'd focus on one article. It was absolutely impossible to get any kind of correction.
Right. I just noticed one point in your argument there, which I thought was quite interesting. You say is the equivalent of one swimming pool's worth of water.
Yeah.
That is such an odd metric.
Exactly.
It's just a metric of one swimming pool. Okay, so yeah, the mainstream media is very skeptical.
It's not skeptical. They don't understand it. So going back to the beginning, my background is that I worked in finance, and then I worked in IT, and I was a developer for a short period. And then I did my 100, if not thousands of hours worth of Bitcoin study to really understand this asset. A lot of these writers are writers. They left university and they just started writing. And so I don't think that they've got the work experience, the tech background, the finance background, or any of this stuff to really, and they haven't put the work into it. And it's really complicated. So, for example, with all your quick fire, nothing there was easy to answer.
Yeah.
And so you can't explain to people in 5 minutes why it's brilliant or why it's good. But if you look at the analysis of the mainstream media coverage, most of it has been bad. And we know that there is a lot of good.
I might make a flippant point picking that up, and that's really to say that it's important to step back and consider the purpose of most modern journalism, which isn't to educate or inform, is to get attention.
Yes.
And writing a bad story about a swimming pool's worth of water will get more attention than something interesting about how Bitcoin's being used in the Global South.
And I have it. So I will spend time reaching out to people in the Global South or people that are using it as a lifeline. And I might reach out to 4 or 5 different people, and then I'll put it together. And it will take me days to write an article like that. Or I can write a number go up article that takes me 2 hours, super easy, copy a few charts. And the impressions or the views that I'll get from that will be like, I could write something and it would get 80,000 views straight. If I write something about the global south, it'd get like 3,000. So to keep honest and to make sure that you go out, and I get paid the same amount for both line as well.
Okay.
So I have to actually separate myself from the fiat system to be able to educate properly.
Interesting. Yeah, really interesting. What do you think needs to change?
Some of it's about storytelling. So when you hit, I mean, Susie's very good at this. She's probably one of the premier Bitcoin journalists in the world at the moment. And well, she's not paying me to say that either. Where you? Certainly not in Bitcoin.
I haven't got any.
If you find a good story that people can really latch onto, then those I think are exciting, and we do encounter some of them. In fact, one that I think straddles several of our interests at the moment is something I know, Susie, you wanted to talk about. At the moment, we waste a hell of a lot of wind power in the UK. I looked at the numbers before I came in. I think 400 million was spent in January and February of this year just turning our wind generators off. That's a terrible waste of money, and it's a very uncommercial solution to the problem we have at the moment, which is that when the wind is blowing strongly, our grids can't cope with the power, and the only solution we've come up with is to pay those generators to turn off, and the people who pay are the end users of the electricity. That's something that angers a lot of people, and it's a non-commercial solution to the problem. And if you believe in free markets at all, you can see there's a giant problem there. And the interesting thing, and I might pass the baton over to Susie here, Bitcoin mining is a very interesting industry in terms of how it buys power. It can't afford to compete with most other commercial buyers of power. So it tends to look for the cheapest form of power, which is often wasted renewables. And there's a lovely jigsaw puzzle to put together there between an industry that's desperate for cheap, wasted power and an utterly idiotic solution that we've come up with, which is making consumers, you and I, pay wind farms to turn off. And you've probably got lots of...
Yeah, exactly that. So it gets used for demand response and flexible load. And there are some amazing examples of it actually working in Texas. It's not just a hypothetical, it's actually helping to balance grids in the States. And so you can create 2 additional revenue streams. And actually going back to Freddie's point about the winter fuel allowance and how we've got nearly $6 billion and that could cover that. Also, when you are using Bitcoin to mine from energy that would otherwise be produced, you're not paying for the curtailment costs, and you're also creating another revenue stream by using that energy to mine Bitcoin. And because it's instant and you can just flip it over, it can be used and integrated into our current systems.
Is this being used at all throughout the UK?
No.
In the UK, not at all. We've got a pitiful amount of hash rate, that's mining power.
Yep.
We're seeing it being used incredibly well in Africa. There are several different countries in Africa. So Kenya, Zambia is beginning to mine. So a problem they have in Africa is a lot of grids simply can't be built because they're not economically viable because of the small size of the grids. But there's a lot of wasted hydropower, for example, run-of-river hydro, providing power to a village of 600 people, let's say. There's a company called Gridless that we've worked with, and they're present in several different African countries. They will make an economically viable microgrid from day one by integrating electricity generation plus Bitcoin miners. When the generation levels are high, the Bitcoin miners will mine, and when the microgrid needs power, the miners power down. And they can do this instantaneously, unlike AI systems, which need to have high uptime. Bitcoin has 2 advantages. It can turn off in an instant, and it doesn't need very high bandwidth. So the Bitcoin that you mine can be sent using not much more than a 3G or 4G phone connection, and definitely if you've got a Starlink.
Yeah.
And it's usually from renewables as well. It's from hydro and a lot of energy sources that they have that they can't use. They've got no actual use for the energy that they have. And so it gives them an opportunity to harness it and build out their energy systems.
And it's not like giving aid to that country. It's you have a commercial-driven solution, which is enabling kids to study using electricity rather than with paraffin.
Right. And naturally, obviously, in developed countries, the United States, UK, we consume more energy. You said that it's not being used in the UK. Is it being used in America much? Well, because as I said, there's a larger consumption of energy, so therefore is there not more excess energy.
Exactly.
So economically, is a strong financial.
Texas is probably the world leader in this. They have an independently managed grid.
But there's also a brilliant, sorry, I keep hitting the microphone. There's an absolutely amazing example of it in Finland, where they're heating 13,000 homes from hydro using district heating. So they're generating the electricity from the hydro, having Bitcoin miners pump the heat into the homes. And so therefore it's completely renewable from a free source of energy. It's creating heat for homes and it's mining Bitcoin. It's
you have
a
an asset
perfect
at the end of
solution.
the use.
Yes, it's perfect.
It's an incredible economic solution.
It really is.
And actually, that's a great point. We haven't really talked very much about heat recycling.
No.
We're seeing this Bitcoin mining more as a cost mitigator rather than as a way of making money. So in our view, this is a completely untapped sector of the industry that I think the UK should really be getting on top of.
Yes.
The idea that, heating costs are very high at the moment. But if you can mitigate the cost of having to heat your home by using a miner, which emits heat during the process that it's running, then you can reduce the cost of your electricity bills.
Yep.
We're already seeing coming to the market. I'm about to take delivery of one myself, and I think you've got one at home.
Yeah, a heat bit. Yeah, because 1 kilowatt in of power is 1 kilowatt of heat out. So if you're not mining Bitcoin in the middle and you're heating your house and you've just got a dumb heater, there'll be a time when every single house is mining Bitcoin, and that's when true decentralization is going to happen.
Exactly.
That's a bold vision.
It will happen. It will happen because it makes economic sense.
Well, so people will be able to mine Bitcoin. They want to flick the heating on, so they just flick it on, but actually you're mining a bit of Bitcoin to offset some of the costs.
Exactly.
Is that
Exactly. You're not becoming a millionaire, but maybe your heating bill is 50 quid rather than 100.
Yeah, it is kind of, minimizes the cost.
Yeah, it's cost mitigation. That's
right.
what
Yeah, because I've heard some companies, I think in Germany, that have tried to do this.
Yes, there's one called Hestia in France that we're familiar with. The space heater that we're looking at is called a Heatbit.
Yeah.
And again, it operates on the same principle.
This is no marketing or sponsorship.
Yes, other space heaters are available.
Yeah, are available. Okay, brilliant. I guess this probably is one of the areas, because you mentioned earlier about the environmental cost of our current economic system versus, say, a Bitcoin one. I just wanted to try you kind of hash that out a little bit more. Is it not that, economic expansion, whether it's on a Bitcoin standard or on a fiat system, we will still be consuming, but with economic growth, you get higher efficiency. We use less resources for more output. Are the two not similar? Like, just by going onto a Bitcoin standard, surely that's...
Well, technology should be making things cheaper.
Yep.
And it doesn't seem to be, because prices are going up.
On an inflation based, it seems, but purchasing power generally, okay, maybe not houses, because houses, we've got a big supply issue on housing. But I said, like,
but even houses, the price of a house, has it gone up because there's a supply issue, or has it gone up just because debt is so readily available, and that as more debt comes into the system, more money comes into the system, it devalues what we've got? And it's not the fact that our house is going up in value, it's the fact that our money is actually becoming less valuable.
Yeah, I think there's probably two sides to that, because I used to be more on that side of the camp of just monetary devaluation, but actually I think supply is the biggest issue, but obviously monetary debasement is an issue. I think there's in Austin, Texas, prices of rent and houses are literally going down because they've just got such a supply. But as I think you're kind of noting too, actually the monetary debasement is an issue, and it does make it more difficult with assets and whatnot. Yes, so you've got a final point I just wanted to touch on, because you wanted to discuss the role of driving technological and social change. What do you mean by that?
So in terms of technological change, I think probably the two main ones I would point to are both in the mining sphere rather than the financial sphere, weirdly enough. And I think I'd reiterate the untapped potential the UK has, particularly given our current drive towards net zero.
Yep.
The more renewable source of electricity generation we create, the bigger a problem our curtailment issue is going to become. And I have an obsession with trying to integrate mining as a commercial buyer of that power rather than pushing those costs onto the end consumer. And And I think the one that Susie eloquently articulated there in terms of heat recycling is also a really untapped and certainly a growth area for the industry. And we live in a damn cold country. We're going to need heating. I think we are ideally placed to grab hold of that. And then maybe tying those two ideas together, it's a source of continual frustration to me that the United Kingdom has traditionally had great expertise both in computer science and in financial services, and we appear to have completely dropped the ball on this fairly obvious meshing of the two together.
Yeah, so the technological, a lot is in the mining and the energy usage, and the final point is social change. How would you explain the kind of social change that's happening with Bitcoin?
I was actually going to go back to the global south again, but I don't know if that's necessarily relevant to.
Yeah, of course. Yeah.
So it is building out renewables, as we've discussed. It separates money from state, which means that if you're living under an authoritarian government, it means that you can get past these things. It gives people a lifeline when they've been debanked or when money is being weaponized, which is something that we see happening a lot. And so with CBDCs potentially on the horizon, if people don't understand what central bank digital currencies are, I suggest they go and do some research, because what it is programmable money that is within the control of governments. So it will be 1984, but closing the loop. It'll be even worse. So I look at the social aspect of Bitcoin in terms of it being a freedom money and money for the people, going back to the quote about how we have to take it out of the hands of governments in a sly, roundabout way.
I think that would be a perfect place to leave it. Very sound, as we would say. Susie, Freddie, thank you very much for joining me and coming on the IEA podcast. And to those at home, if you consider joining the IEA Substack, where you can find all of our digital and publications and articles, please sign up at insider.iea.org.uk. And until next time.